I'm going to show you a simple strategy that in 2 weeks made over $16,000. Then I'm going to tell you what that means to you, and I'm going to show you a full 2.5 year back test of that strategy. Stick around to the end when I reveal the full profit over that entire 2.5 years. You're not going to believe it.
Let's trade.
All right, guys, I wanted to start by just showing you an example of the strategy, and then what you can use this to talk through the particulars of what parameters I used to run the back test. So it's a pretty simple opening range breakout and retest strategy, and you can see this example is earlier this month, so the beginning of July there. But basically, I chose the 5-minute chart, so 5-minute opening range. You just mark the high and the low of the first 5-minute candle, and then that is your entry and your stop point. So basically what we want is to see an excursion to the bullish side, and then a retest. We enter here, and then we set our profit target and our stop, and see what happens. So obviously, I chose an example where the trade worked because it's just a little bit better to show you guys the particulars here, right? So we've got the opening range. Again, set your high of the range, the low of the range. What I need is an excursion to a certain degree before the pullback, right? So that basically says price has to get a certain point away from the opening range high before it can even pull back and then trigger an entry. Okay, so the level I chose was, it's going to sound ridiculous, but since I'm doing this on the SPY, I should have mentioned that. So the SPY only is what I tested. SPY, the excursion is 0.12%. It doesn't seem like a lot, but it's just enough to give us a good cushion here of, it makes a decent move and then pulls back. So also when it touches that excursion point, we'll call it, the candle that does that also needs to be completely above the opening range high. So the body and the wick need to be above the opening range high. So these two candles right here, they qualify as touching the excursion point, and no part of the candle is touching the opening range high. A candle like this, for instance, if this would have been the next candle here instead of this guy, right? This wouldn't have counted because although it touches the excursion point, the wick is below the opening range high, so that wouldn't have counted as like the initial trigger. All right, but in this case, it goes to the excursion point. The candle and wick are above the opening range high, so now we're just waiting for a pullback. And basically, once this happens, you would just set your limit order at the opening range high, right? And then price comes back, touches the opening range high, you get filled, and you're in the trade. At that point, you would want to set your stop. I use hard stops because they just work for me. Mental stops are, I think, a bad idea for most traders, but until you're really seasoned, and I just see no reason to not just set a hard stop. So as soon as my order gets filled, I set the stop at the opening range low. You can do the opening range low, minus a penny or minus 5 cents or something like that if you want to be a little bit below the opening range low. The price isn't really that accurate most times, so it's probably not going to matter much. Every once in a blue moon, you might not get stopped out because the price missed you by a penny. But anyway, so then you're in the trade, and basically you want to set your stop. I would also just set a profit target. So for this back test, I just did, my profit was 2R, so 2 times the risk. So whatever this area was, the profit is 2 times that, right? And so you can see these other lines. So this 100% line here, just the way this the drawing that I use for this, 100% line is your entry line. So 200% is 1R, 300% is 2R. So you can see that you would have entered the trade here on the screen candle, and you would have hit your profit target here. Now look, you could, if you instituted some sort of a trailing stop or a partial take at 2R and then let some ride, you get up to 4R here at the end of the day. So yeah, sometimes you leave money on the table, and depending on your system, that's perfectly okay. You're never going to catch from the very bottom to the very top, almost never. If you do, it's usually dumb luck. So anyway, that's the strategy, guys. Okay, so next I want to show you the 2-week period that I was talking about. And so This trading strategy, when I did the back test, it doesn't pop trades every day or even every week, just because it's pretty specific criteria. But the way I do back tests, I need that specific criteria, and I'm totally okay with trading less if it means making more money, right? Busy fingers does not mean profitability. So anyway, here's a 2-week period, and actually it's just 3 trades in that 2-week period. So you can see this is April of this year, so April 3rd, 2024. This is on SPY again. The whole back test was done on SPY. So you could run these same parameters on the Qs and on some of the bigger names, maybe like some of the Magnificent Seven there, Nvidia and Amazon and all those guys, right? So you can see the entry and the exit. Each one was a winner. So each one, because my profit target was 2R, they all hit 2R. Not every winner hits 2R. Some of them are just floundering between the entry point and 2R at the end of the day, and then they just get taken off at the end of the day. All right, but you can see the profit on the first trade of the week there, or the 2-week period there. The profit was 5,250 roughly, and then 5,400, and then 56, almost 5,700. So you can see we totaled 6R, and the profit was $16,394, which is not bad for a 2-week period, right? There's people who don't make that in a month or even longer than that. So that's a pretty solid profit just trading the SPY. And a simple strategy like this wouldn't even have to be your only strategy, right? So okay, I think that's good for there. Okay, next I want to do some of the details. This is where the tone of the video is going to change a little bit, guys, and I just want to be honest about that. So just keep in mind that those were 2 cherry-picked weeks out of 18 months of backtesting. And the reason I did that is because I see a lot of the trading gurus, or whatever you want to call them, on YouTube. They do that. They show you a strategy, they backtest a week or 2 that's really profitable, and then they're like, oh yeah, it's a great strategy, go ahead, have at it. So that was an incredible 2 weeks. Like that, if you would have just sat down and started trading in those 2 weeks and you would have made profit like that, it would have been insane, right? The entire back test was from early 2023, so January 1st of 23, to basically the most recent I could do when I run the back test, which was like the 19th of July in 24, right? So yeah, it didn't perform like that every 2-week period. Of course it didn't. That's not how the market works, guys. It's not how any strategy works. So the other thing to consider is that when I ran the back test, I calculated it based on, I calculated the profits based on a $100,000 account at the start. So on January 1st of 2023, $100,000. So by the time we rolled around to where those 2 weeks worth of trades happened in April of this year, the account was already bigger than that. So if you're not starting, or you don't have that kind of trading account, if you're maybe just sitting above the PDT rule at 25, 30,000, or even if you're at one of the smaller brokers and you've got like 5,000, your profit isn't going to look like that, guys, right? It's not going to look like 16,000, a little over $16,000. It's just not. That's dependent upon the account size. I also, one of the parameters I used was a 2% risk per trade. So each time you entered a trade, based on where your entry was to the stop loss, if you got stopped out, you would lose 2% of your account. That's actually pretty moderate. Some people go as low as 1% or 0.5%, depending on the size of their account. I've seen as big as 5 to 10%, which I think is pretty aggressive. Man, losing 10% of your account on one trade is brutal, but it also means that your profits are larger, right? So it's just a more aggressive strategy, and I guess it depends on the parameters of, or your expected parameters of your strategy, right? How often do you think you're going to win? How often do you think you're going to lose? And can you sustain taking a 10% loss? Okay, next I want to just talk about how the back test was performed. I'm not going to go into super detail here, so this is just a very basic kind of flow chart I made. So I backtest with some Python code that uses Polygon to grab data. So Polygon just has a ton of historical stock data, and you can use Python to access that data and then crunch it. So you can see the Python code talks to Polygon, grabs the data, Polygon supplies that data because they've got tons of it, and then use more Python code to perform the test. So crunch all the numbers based on all the parameters, and then export those to Excel so that I can look at them and make sense of the average winner, the winner to average loser, the win rate, profit ratios, all that stuff. So let me show you a little bit of what that looks like. All right, guys, I'm just going to show you the code that I used, minus one important line. I took my my key, that sort of my passcode that you use to access Polygon, because I don't want you guys stealing that from me. But you can see the code that I use. I shared this once before, guys, in a different backtest video, and the code, a lot of it itself is borrowed from a guy who goes by Day Trading Zoo on Twitter. He used to post a lot of great stuff about coding on Polygon. It was really helpful. He doesn't post so much about that anymore, like actual code snippets, but I learned a lot from him, and then also just trial and error and Googling problems for myself. So some of this may look pretty elegant. Those are probably the parts that someone else wrote, and then the parts that look like, holy shit, this guy's basically like playing with little blocks or something, the equivalent of little kid toys. That's probably the code that I wrote. I'm not a coder, I'm a trader, and I learned just enough of this stuff to access data for backtesting, because I didn't want to use something like Spikey. So anyway, this is the code that I use to access the data and kind of pull it in and store it and manipulate it a little bit. And then this is the code that I used for testing, doing the back test. So in other words, running through all of the code and testing whether a trade would work or not and all of that. It's a lot of just if-then statements. Anybody who's familiar, this code was the original code I used to test a bunch of different parameters all at one time and then be able to compare them. And then I just kind of did this in order to use the parameters that worked the best in this backtest to kind of play with them a little bit more and kind of fine tune some details. So anyway, this is the code. I'm not going to spend a whole lot of time on this, guys, because I'm not really, this is not what I'm here for. But anywho, and then it pumps it out to Excel files, and I get to either manipulate it that way or just kind of look through it a little bit more. Okay, guys, I'm going to show you some charts of the 2-week period. So this is that 2-week period in April. Actually, it's just from the 3rd to the 10th, because those that was the date range we needed for those 3 trades. So I'm going to show you something that happens sometimes when you use Polygon to do a back test that you have to be aware of, and that is this right here. So basically what we would do on this one is you've got your opening range high and your opening range low, but as you can see, we don't really get a far enough excursion, right, before it pulls back. So the problem with the data here, and I'll fully admit, so this day shouldn't have ended up in the backtest, because there wasn't a far enough of an excursion to really trigger an entry here. What happened was, in Polygon, for this 5-minute period, either this one or this one, I forget, they have like a phantom print that's way down here. So basically, the way the code runs, it thinks that this candle, after this long excursion, came back, tapped the entry point, and so it said, okay, well, we'll enter here. And then the next candle, the price is already way up here, and basically you hit your profit target instantly, because profit target would be here, right? So yeah, so this is funny that I discovered this just kind of looking through by hand. So sometimes you do have to go back and hand check some of the Polygon data, because they do have phantom prints like that. And basically it'll be like when a late order prints or something. That's just part of the data. So there was an order that came through here somewhere down in this region on these candles, but it doesn't get filtered out in Polygon. So you have to just be careful of that stuff. There's probably some elegant code you can do to make sure that that doesn't happen, but I'm not sure how to do that. But anyway, so this day actually shouldn't have been part of the back test, which is interesting. But let's keep looking, because there's still some points I want to make. Because again, guys, the point of this video is that a 2-week back test doesn't fucking mean anything anyway, right? So Let's look at the 5th. You can just see that this was a pretty good day. This is actually a pretty legit one, and the opening range is there. It has a pretty good excursion. It pulls back, you get long here, and then it hits profit target all the way up here, and it even makes it past 4R if you have a system that hangs on that long, right? So that's a good one. I'm going to show you something on the 10th here. So this is the 10th. This is the last day. This is just kind of a funny thing with when you set up parameters, right? So it has a pretty good excursion. Let's zoom in a little more here. It has a pretty good excursion. This candle, technically, although it doesn't look like it the way I drew the lines, the wick here is 1 cent above the opening range high. So the opening range high is 513.66, and the low here is 513.67. So technically, that is cleared of the opening range high. So you would get long on this candle right here, and then it's a quick run right to the profit target. Now this is one of those places where if you didn't take your profit at 2R, it's gonna reverse back and end up stopping you out, right? So that's why sometimes the 2R profit target and just taking your profits early is good. What you could do is take a partial profit at 2R and then move your stop to break even, and then at least then you're not, you're locking in some of the trade and not losing any money. Hoping that some of it will run like we saw in the past examples to like 3R or 4R or even beyond, and that way you can kind of capture some of those extra profits and but not risk any more of what you've already got. So, okay, guys, the next thing I want to talk about is what's on the screen right now. So this is I want to break the back test down by date ranges. Okay, so again, remember this is on a $100,000 account, right? So from January 1st, 2023 to the 19th of July, 24, you can see that there were 60 total trades, 26 wins, 34 losses. That's a win rate of 43%. And then the profit ratio is 2.38. So that's basically your average winner divided by your average loser. Okay. So that's a winning system, guys. When you crunch the numbers, you'll end up, if you can do that over time, you'll end up profiting, right? But here's the thing, on a $100,000 account for about 18 months or a little bit more of data, your profit is less than $40,000, right? And look, that's actually a pretty decent rate of return, right? That's what, 30%, 40, almost 40% on your money. So that's like not bad at all. But can you live on that? Like, probably not. $40,000 over 18 months. You're probably below the poverty line at that point, right? So even with a $100,000 account and a system like this, you're not making enough money to live off of, right? You'd need another income. Okay, now that's the period from the beginning of 2023 to current, basically. So let's see when we include 2022. This is the trick of the video that I didn't tell you guys at the beginning. I actually went back to 2022, and you can see that there's then 112 total trades, 41 wins, 71 losses. So the win rate drops a little bit to 37%. The profit ratio drops. It's a pretty significant drop, 1.9%, or 1.9. Sorry, it's not a percentage. So your profits, if you started with $100,000 in 2022 now and came to current, is only $18,000, because 2022 was a shit year for this strategy, because this is a bullish strategy, right? Now again, the point of the video is I showed you a 2-week back test, which makes it look like this strategy is the holy grail, when really the year of 2022 was, you would have lost money. In fact, I've got that here. So in the year 2022, you would have lost $14,000, almost $15,000 if you traded this strategy, right? So the reason I'm doing this, guys, is, again, those YouTube traders who show you a week's worth or 2 weeks worth or even a month's worth of back test or a month's worth of their own profits, and they act like they've got a system that works for all time. That's just not the case, guys. It's not how that works. market environment is really important no matter what your strategy is, whether you're long bias, whether you're short bias, whether you're scalping, you're day trading, or you're swing trading. Understanding the market environment is paramount. It's super important. If you're trading in the wrong environment, I don't care what your setup is, it may not work. In fact, there are going to be environments where your setup doesn't work. This is a great example. From 2023 to 2024, this was a great setup. It was easy to implement, and it worked pretty well. You could probably tweak a couple things and maybe optimize it even a little more, like I talked about, maybe partial profits and a trailing stop loss or something like that. You could maybe squeeze a little bit more profit out of it. But when you add in 2022, it was a different market environment that year, and the strategy sucked. And so that's kind of the way things go. So if you think, guys, that you're going to start trading, you're going to have a simple strategy, and you're going to make a ton of money, you're going to start doubling or tripling your account in a year or a couple of months, or you think you're going to get to a profitability point where you're going to live off of it really soon, guys, it's probably not realistic. You've got to have realistic expectations or you're going to drive yourself crazy. You're going to be wondering why all these gurus on YouTube are buying Corvettes and Lamborghinis and shit, and you're losing money. And you're going to start to think that it's because of you, that maybe your psychology isn't right or you're not following the rules. And some of that could be true, but most likely it's just that you've been led to believe in unrealistic expectations. And once you adjust those, you'll do a lot better and feel a lot better about yourself. But also, you'll just know that your timeline for getting to profitability or getting to a point where trading income actually starts mattering in your life, it's a long way off. It's a lot longer off than what you originally planned. So, guys, I hope the video was helpful. I know I kind of played some trickery here with a fancy, catchy title, and I don't even know what the thumbnail is going to be as I'm making this video yet, but it'll probably be pretty ridiculous. So I know I pull a little bait and switch here, guys, but this is really important stuff. If you haven't seen some of my recent videos about taking skeptical approaches, skeptical viewpoints on some of the YouTube traders, it came out of the comment section of a couple of those where people are really frustrated and trying to figure out like what's real and what's not. And so I wanted to just kind of do this example to show you what a realistic strategy looks like, and how that might fit into your overall trading program. Obviously, this strategy could be one little part of your trading program, and so if it has a down year, maybe the rest of your strategies kind of make up for it, and that's fine. Or maybe you realize the market environment is not right for the strategy, and you stop trading it for a little while. Meanwhile, you've got other strategies that work. That's perfectly okay, and that could be realistic. But just to think that you're going to be some sort of market wizard with a super simple strategy, guys, if it was that easy, literally everyone would do this. Why wouldn't you? You'd be making tons of money with no boss and a couple hours of work a day. That sounds a little too good to be true, right? So anyway, if you liked it, hit the like button, all that YouTube stuff, and if you've got questions or you want me to do some other back tests, throw that in the comments section, guys. I'm happy to look into some more things, and let's all try to learn about this stuff together, okay? A little bit of a peculiarity, oh my God. Fuck it.